This is a demonstration of Exercise 1421B, Settlement of Debt. Nixum Company owes $800,000 plus $121,000 of accrued interest to Second State Bank. The debt is a 10-year, 10% note. During 2020, Nixum's business deteriorated due to a faltering regional economy. On December 31, 2020, Second State Bank agrees to accept some undeveloped land and cancel the entire debt. The land has a cost of $1,200,000 and a fair market value of $680,000. The instructions state in Part A, prepare journal entries for Nixum Company and Second State Bank to record this debt settlement. So Nixum is the debtor. The land was purchased or had a cost of $1,200,000. Now it only has a fair market value of $680,000. So Nixum will have to record a $520,000 loss on the exchange of the land. However, the bank has agreed to accept the $680,000 land in exchange for a debt that equals $921,000, $800,000 of principal plus $121,000 of accrued interest. So Nixum will also record a $241,000 gain on the restructuring. Now the bank, who is the creditor, is accepting $680,000 land, again in exchange for a debt that is owed to them that totals $921,000. So the bank will have to record a debit to their allowance for doubtful accounts for the difference of $241,000. So let's make these journal entries. The debtor, Nixum, would debit notes payable for $800,000. They would also debit interest payable for $121,000. They would debit the loss on the disposition of the land of $520,000. They would credit a gain on restructuring of the debt of $241,000. And then they would credit land for the cost, which was $1,200,000. The bank would receive the land and would record it at its fair market value, which is $680,000. They would debit their allowance for doubtful accounts for the difference between the value of the land and the amount that's owed. They would credit notes receivable for $800,000, and they would credit interest receivable for $121,000. The B portion of the problem states, how should Nixum report the gain or loss on the disposition of the land and on restructuring of debt in its 2020 income statement? The loss on the disposal of the land and the gain on the settlement of debt would be recorded as ordinary income and loss. Part C states, assume that instead of transferring the land, Nixum decides to grant 200,000 shares of its common stock, $1 par, which has a fair value of $680,000, in full settlement of the loan obligation. If Second State Bank treats Nixum stock as a trading investment, prepare the journal entries to record the transaction for both parties. So this time, Nixum is going to be exchanging stock, their own stock that's worth $680,000, in exchange for the $921,000 total debt. And so they will still recognize a $241,000 gain on the restructuring. The bank will be accepting, in lieu of the $921,000 owed to them, the stock that is worth $680,000. So again, there would be a debit to the allowance for doubtful accounts of $241,000. So we can make the journal entry on Nixon's books by debiting the note payable for $800,000, interest payable for $121,000, and then we would credit common stock for the par value, which is $200,000, because 200,000 shares times $1 par, and then we would credit additional paid-in capital for the difference between the market value of the stock, $680,000, and the par value, which is $280,000. So that would be $480,000. The gain on the debt restructuring would be credited for $241,000. Second State Bank would receive the stock, which is worth $680,000, and they would credit investment in trading securities. They would debit their allowance for doubtful accounts for $241,000, the difference between the total amount owed and the value of the stock. They would credit notes receivable for $800,000, and they would credit interest receivable for $121,000. And that is the conclusion of the demonstration for exercise 1421B.